On the 21st of February, Russia acknowledged the independence of two Ukrainian breakaway regions. The conflicts between two countries has escalated since. Russia has sent its troops spreading out into the entire Ukraine. Wenjie, as an equity investor, can you provide us HSS frameworks to think about the impacts?
While the absolute dollar value of Russia's and Ukraine's economies is small, the impact to the global economy is significant. On top of that, the West has imposed a number of sanctions. We believe there are several short and long-term risk factors that warrant investors' attention. The three key short-term risks are the rise of inflation, disruption of transportation logistic networks, and the rise of risk premium. Russia and Ukraine are the two major soft commodity exporters, such as oil, gas, wheat, and fertilizers. We have, in fact, observed the spike of commodity price lately. On the transportation and logistics, Russia already closed its sky to more than 30 European nations. This will translate to higher logistic costs since flying over Russia was the fastest way to reach Asia from North Europe. On the risk premium, the rising geopolitical tension is causing the equity discount to rise. This has triggered increased volatility in share prices lately. The three key long-term risks that the investors should monitor are the further escalation in terms of geopolitical tensions, major economies' energy policy, and the uncertainties around central banks' interest rate policy. Russia is demanding NATO, or the North Atlantic Treaty Organization, to retreat from Eastern Europe and bar Ukraine from joining the alliance. It is unclear if there will be any agreement regarding these requests. European countries also import roughly 40% of their natural gas from Russia. It will be interesting to see how European countries, particularly Germany, having decided to replace nuclear with gas power plants, will be able to adjust their energy policies while still moving towards the CO2 neutrality target. Finally, the central bank's policy during this period of uncertainties will be crucial. The policymaker needs to fight for inflation while making sure the rise of interest rate will not damp the growth.
How do you see the impacts on Chinese economy?
We believe China will be relatively less impacted by the conflict between Ukraine and Russia. Among the 6 short and long-term risks we highlighted earlier, 2 are irrelevant for China. Chinese energy policy does not depend on Russia. Chinese central bank's interest rate policy is also clear. The 2022 two sessions, or the Chinese People's Political Consultative Committee and the National People's Congress, will be held from March 4th and 5th respectively, lasting for 7 to 10 days. These are the annual meetings that set full-year growth rate target for the country. We believe policymakers will continue an accommodative interest rate policy to ensure stabilization of the economy. In the near term, we believe Chinese corporates will be able to pass on some cost inflation to consumers. In macroeconomics, PPI, or Producer Price Index, is used to measure the cost of input costs for the corporate. On the other hand, CPI, or Consumer Price Index, is used to measure the price hike or inflation borne by the consumers. There's usually some time lag between the rise of PPI and CPI. Recently, we started to see the Chinese corporates are raising the price of the goods and passing on the cost inflation to consumers.
Can you talk about the investment implications?
The key message we want investors to take away from today's session is to stay invested. After studying the 6 major global conflicts in the last 30 years, we concluded that the impact from regional conflicts tends to be short-lived, just like any other economic crisis. The HSD China Fund's ambition is to hold the best 25 Chinese companies based on their inner strengths, valuation, and relative attractiveness. We will continue to look for opportunities which best fit our investment criteria. We remind the investor that the secret sauce to success is through long-term investment.
That's it for today. Thank you for watching, and I hope to see you again in the next episode.